Today, we're going to talk about Bitcoin, and I just want to go over some things to watch as we go into the weekly close. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Let's go ahead and jump in. So, Bitcoin has sort of been following this idea that we previously talked about of a dip going into the halving. If you're not familiar with what I'm talking about, you could look at things like year-to-date ROI of Bitcoin in 2024 and simply look at all prior three halving years and see that it's actually quite common for Bitcoin to dip down 10, 15, even more last cycle percent below the yearly open. And of course, this has happened again. Of course, it might not be over with, but we can at least see that this dip that we talked about has at least come to be. Um, in terms of trying to understand if it's over or not, I think there's some things we should watch going into the weekly close, right? And also over the next few days. The first thing I will point out is that if you guys remember, we talked a lot about the 8-week moving average, right? The 8-week SMA. And the reason we spoke a lot about the 8-week moving average was because, at least in this cycle, right? And again, the market is subject to change. And we've pointed this out basically every single one of these dips. And so far, eventually, we made it to the bull market support band. You should note, though, that some of the times we made it to the 20-week. I mean, we did have a wick further down, but if you were to ignore that wick, we made it to the 20-week, but only because the 20-week eventually, sort of the 21-week EMA sort of came up to where the price of Bitcoin was. Okay. Kind of the same thing over here, right? We got below the 8-week moving average and we more or less went sideways and then down slightly to hit that bull market support band. So you have definitely a few examples where that is the case. And so we said, all right, well, if we get below the 8-week moving average, then therefore the risk increases of seeing a drop to the bull market support band, right? The risk of it increases. Now, I have to reiterate, it doesn't mean that it has to happen, right? It doesn't have to happen. It could happen. If we were to look at what happened in 2019, and this is why I think the weekly close will be important. If you look at 2019, you will see that when you got that weekly close below the 8-week moving average, we then got back above it the following week, right? And then we saw follow through the week after that, right? We continued to go up for a little bit. So there are certainly examples, right, where you go below the 8-week moving average and you don't immediately test it. Here's an example right here of one where you sort of just hang out below the 8-week moving average. That was for about a month, and we didn't actually tag the 20-week SMA until a couple months later. Okay, so we can certainly find exceptions to the rule, but a lot of the times, right? A lot of the times when you break the 8-week SMA, you test that bull market support band at some point in the future, right? And our argument previously was that February was sort of the time that it could theoretically happen, and we are getting close to February. I will say, though, that if going into the weekly close, we get back above the 8-week moving average, then that could certainly kick the can down the road, by a number of weeks. The 8-week moving average right now is at 42,436, right? So it's several $100s higher than the current price. So I'm sort of suggesting that if we were to get a weekly close back up here, let's say 43K, 44K or something like that, then that would imply that this is at least a short-term fake out. Kind of like how we have seen some of those in the past, right? But if the 8-week moving average holds as resistance, then it would imply that the pre-halving year pattern, the halving year pattern still could very much play out, and that pattern has been, getting that dip early on in the halving year, which we've already gotten somewhat, but it hasn't been as substantial as all of the other halving year dips that we've seen. In fact, the dip so far for Bitcoin is actually in line with all prior dips in this move, right? So all these prior drawdowns were about 20 to 22% or so. And this one right here is about 21%. So far, it's actually very much in line with what we've previously seen, right? And so you cannot discount the possibility that the short term, the dip is over, right? There's always a chance that it is, and we just see some renewed interest going into the halving. We've talked about that. And what I mean by that, if you look at the year-to-date ROI, while you can certainly have dips that sort of continue throughout the first quarter of the year, by the time you get to the halving or you get closer to the halving, Bitcoin normally experiences a move to the upside, right? Again, every prior cycle, we've had this sort of the dip before the halving, right? 3 cycles, 3 dips. This is the current cycle. But then going into the halving, there was a bit of a pump back up to the upside, right? So we have to consider that. Now, of course, guys, I mean, things can deviate from this sort of stuff, right? I mean, if macroeconomic events happen or if a geopolitical event happened that we cannot possibly predict, right? I don't think anyone was predicting the pandemic back in March 2020. I don't think people were predicting the pandemic drop anyways. If something like that were to happen, obviously it could throw a wrench into the whole year-to-date ROI stuff. I'm just pointing out that we normally get a dip early on. We've had a dip so far. We're just trying to figure out if it's over or if it will continue before getting to the halving. So looking at this, we are still slightly below the 8-week moving average. Another way to look at this, though, is to look at daily moving averages, because the daily is also interesting. If you look at the 50-day moving average, there's been a bit of a pattern with the 50-day SMA, and at least in the last 2 moves, right? At least in the last 2, if you look at the 50-day, we got below it, came back up, and then retested it, and then went down and then put in a slightly lower low, and then we broke through. Same thing over here, right? We got below the 50-day, we went back up and retested it, and then we got a dip down. Here, we got below the 50-day. You could argue that this was the retest, right? If you want to say that we got below the 50-day right here, then you could argue that this was already the retest of the 50-day SMA. Or if you don't want to use that because they're so close together, kind of like how if you look over here, I mean, you could almost say we got below it right there, and then we sort of went back up. But the point is if you look at it, you can see there has been a pattern of getting below the 50-day SMA, coming back up, retesting it, getting rejected, going back down. So the 50-day moving average is at 42,864. So that's about $1,000 higher than the current price. About $1,000 higher. And it would be, if you go look at the 8-week moving average, the 8-week is at 42,439. So if you get back to the 50-day SMA before the weekly close is over, then you are in fact back above the 8-week moving average. So I think the 50-day is important to sort of keep in mind. And then the caveat to retesting it before a slightly lower low, back over here in 2023, March of 2023, we actually didn't get rejected on it, right? We just kind of went down and then went right back up. Okay, so that was a different pattern. And note that this bounce here occurred off the 100-day moving average, right? So this bounce here was off the 100-day. Here, we came down to the 100-day moving average and then got that bounce back up to the 50-week, right? And then over here as well, right? We came down to the 100-day SMA, or sorry, the 50-day, and then got that bounce back up to the 50-day. So there's a lot of examples of going below the 50-day SMA, going down to the 100-day, and then going straight back up to the 50-day. You know, you can see this pattern is played out on a number of occasions already, right? 50-day, 100-day, back to 50. Here, it was 50-day, 100, 50, and then below the 100. Same thing over here, 50, 100, 50, and then below the 100. So here, so far, it's 50, 100. The 50-day is all the way up here, you know, at just below $43,000. Okay. And by the way, I mean, on a shorter time frame, right? On a shorter time frame, if you were to look at sort of connecting the dots, if you will, connecting these wicks, sort of this wick to this wick to this one, to sort of where it broke down here, it basically gets you up to around that $43,000 level. So these are all important milestones, I think, that are worthwhile to follow going into the weekly close and seeing, does it get back above the 8-week SMA? If it does, it sort of kicks the can down the road a little bit. If it doesn't, then it implies that, the initial plan could still be on, right? You could still have a dip into the bull market support band sometime in February, if that's the case. I do want to remind people, I don't think I remind people enough of this. I talk a lot about short-term price action on here because, it's just speculation, right? Dubious speculation. A lot of times, what I say in the short term doesn't come true, okay? And I want to remind you that I don't look at this sort of stuff and make investing decisions off of it, right? I don't. If Bitcoin risk is low, then I buy. If it's high, then I sell. That's all I do, right? That's all I do. I don't look at, trying to scale out below the 50-day and scale in at the 100-day. I don't do that sort of stuff. So, if you're following me and you're making trades based on that, just know that I'm not doing that at all, because I think in the short term, it's impossible to predict where the price is going to go. I think it's more akin to, again, a random walk or geometric Brownian motion. I've said that for a long time, and I will not be swayed from that. I think that is, I think short-term price action is extremely unpredictable, and no matter what happens, we can always come up with a reason for why it behaved that way, right? For instance, if price action were to, if price action were to go up and then come back down, everyone would just scream, oh, well, we were just putting in a lower high before testing it. If we were to go up and put in a higher high and then come down, people would just say, oh, well, that's, there's some type of divergence there, right? Or if we were to just go down now over the next few weeks, then it'd be, oh, we're just doing what we always do in the halving year, and that's test the bull market support band sometime in February. Okay? So we can always explain it after the fact. But I just think that people need to have a plan, and I've said that for a long time. For me, it was just buy Bitcoin at low risk levels. Okay? And you guys know I haven't been too fond of the altcoin market because of my views on Bitcoin dominance. But I do want to say, that the former version of myself, right, the one that wanted to take on more risk, I want to take on less risk now, but the former version of myself would have already been knee deep in altcoins, right, long ago. And I've said that many, many times, right? Last cycle, I was buying altcoins in Q3 of 2018 of the bear market year. And, those altcoins got absolutely rinsed on more than one occasion, right, before they finally went up. So just remember, right, if you're struggling to figure out the appropriate strategy, just remember what is right for you is going to be different than what's right for other people, okay? You might want to take on more risk than someone else. For me, I'm comfortable with Bitcoin in my portfolio. The altcoins, yes, I get the cases for them that, okay, if Bitcoin goes up, it'll drag them with it. But that's just my own conviction of, hey, I want to do this a little bit more risk averse. So that's why I focus so much on Bitcoin dominance and showing you guys all Bitcoin trends. Admittedly, it's possible that those trends turn around before I'm willing to say that they have. And it's possible that's already happened. But I will just continue to provide my views on the market. But I do want people to remember that, if you're doing something like just sitting out of everything for years and years and years and years, that's never been my suggestion. My suggestion is get into the market at low risk levels, at what you're comfortable with, and be okay with that. And then when you go up to a high enough risk level, it's okay to skim some profits, okay? For instance, in this case, I took some profits off the table for the first time up in this range. For the first time, right? And again, That's all discussed on ITC Premium, right? For the first time throughout this entire move, I took some off the table. And you might say, well, Ben, I mean, what about all these moves to the bull market's ripping? Were you not selling here and buying back and selling and buying back? Or selling and wish you had bought here and you didn't, and then it just went back up? No, I mean, I didn't. And I didn't. I scheduled some limit orders down here. Some of them got filled. Some of them didn't. Admittedly, I wish more of them had, but they didn't. Some did. Between 15 to 21K, I had some get filled, and I just took some off the table. Finally, up in this range up here. And the reason was because we went to the 0.6 to 0.7 risk band, right? That was the only reason. And again, if you're not familiar with what I'm talking about, if you go look at the Bitcoin risk, you can see now it's 0.558. But during the spot ETF hype, we went to some higher risk levels, right? All the way into the 0.6 to 0.7 risk band. And for me, when we get into 0.6 to 0.7 risk, that's where I start to take a little bit off the table, just in case, right? Just in case. And if you're not familiar with why, if you were to look at like historical risk levels, right? In 2019, I took a little bit off the table, right? A little bit. It was like 1/15 of my Bitcoin stack. And I felt like an idiot at the time for doing it, because I'm like, well, hell, it's just going to go and put in new highs. And here I am selling some of my Bitcoin at 14K or 13K. I took 1/15 of it off the table, right? Or maybe it was 1/10. I can't remember. I took a little bit off the table. And I felt like an idiot for months, because price was just hanging out in that region. And then eventually it went down. And then I didn't feel like an idiot anymore. I was like, oh, well, I'm glad I took a little bit off. And then I sort of had that feeling of, wow, I just wish I'd sold everything when it was at 14K, rather than watching it drop all the way back down to $3,800, right? And so for me, if it goes above this 0.6 risk level, then I take a little bit off the table, right? Not a ton, but it's just an admission to myself that I don't know if this is going to evolve into something like this, where it's a larger spike up, or if it's just going to evolve into something similar to 2019, where it just sort of tops out between 0.6 to 0.7 risk, right? I think it's fair to admit to myself, I don't know what it's going to do. And so the way I handle that is I take a little bit off, right? Like 1/10 of my Bitcoin in this range, with the ability to sell 2/10 of it if it goes up into the 0.7 to 0.8 risk band, and 3/10 if it goes to 0.8 to 0.9, and then the rest of it between 0.9 and 1. When I say the rest of it, I don't really mean the rest of it. I think it's okay to have sort of a stack that you just hold on to no matter what. But that is how I navigate the market, right? So we talk about all these things in the short term of like, well, what's Bitcoin doing? Is it going to go up? Is it going to go down? Are we going to get this dip before the halving? Are we going to go to the bull market support band before the halving? Are we going to get a larger correction before the halving, like last cycle, even though that was sort of, that was a black swan? I don't know the answers to all those questions, right? Because I recognize that I have, I cannot predict where the market's going to go. So rather than predict it, I react to it. If price goes into these higher risk levels, then I sell a little bit. If it comes back down, then I buy it back, right? That's how I do it. So that way, it basically it covers you on all bases. I mean, if this ends up being a top for a longer period of time, then hey, I took some off the table. I can feel good about that. If on the other hand, it's not, and we get another pump into the halving, which is kind of like, if you look where we are right now, this is the market cycle ROI compared to the last two cycles, right? If we get another pump here into the halving in 3 months or in the next few months, well, then I certainly wouldn't want to have all my Bitcoin gone, because what happens if it goes up again, right? So that's how I navigate it. I just want to make sure I clarify that, because feel like there's some people that will, you know, sort of look at these views and they'll sell everything here because I'll say, hey, good chance Bitcoin corrects into the bull market support band. And then they just wait. And then what if it just stops here and then it goes back up and then they feel like, oh, well, now what? So just remember the way I navigate the market is by the risk levels, not by market cycle theory, not by short-term price predictions, none of that stuff. I'll leave that to the experts. And I'm not saying that in sort of in a condescending way. I mean, I really do think there's people that are much better at that than I am. I really do. I think there's a lot of people that are much better at making short-term price predictions than I am. And hats off to them because I can't do it. I can't. And I think it's too stressful to do it. So we will see, you know, we'll see if we fall back in. I mean, if we fall back into the bull market support band, then the 20-week SMA is at like 36, 37K, right? The 100 week is all the way down at like 28K. So that's a lot, a lot deeper of a drop if it were to go down to that level. So I just wanted to sort of explore or discuss some of those things. But those are the main things I would look for going into the weekly close, right? Do we get above the 8-week SMA? If we do, it implies that we're kicking the can down the road, potentially like we did over here in 2019, right? As a reminder, just to put it back on the screen, right? It implies we might be kicking the can down the road a couple more months. If we stay below it, then I still think the sort of that pre-halving pattern could still be potentially in play. But we must also be aware that the 20-week SMA, I mean, it is going up, right? I mean, so if price were to just go sideways, right, eventually it would just come into that range. So that's important. I think that's an important thing to consider. So we have the 8-week SMA at 42.4. We have the 50-day at 42.9. 42.9. So 43K, right? 43K is the level that if we get above it, it's sort of saying, all right, we're back above the 50-day, we're back above the 8-week. Now what, right? Is it just a fake out below the 8-week and we have to spin a while longer before we get to the bull market support band? And that's always a possibility. So that's the 50-day, and then you have the 100-day. Last two drops, we went down to the 100-day. The only thing to sort of remind ourselves of is that, so far, while we haven't made it below the 100-day like these last two moves, we have seen the same type of drawdown as those last two moves, right? So that's something to consider. And even the last three moves, right? Because this move over here was also about a 22% correction. And then I don't even remember where the 200-day is. We haven't visited that since October. It's currently at 33.7, right? So it's actually, you can see that back in March, we also tested that 200-day moving average right there. And we also tested it back in August. So March, August, it's all the way down here at 33.8K right now. I think we'll wrap it up there. That's what I would look for going into the weekly close. Hopefully the discussion on strategies is helpful to you guys. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up.